Aadil Zaman is with us, partner, Wall Street Alliance Group. Thanks so much for being with us.
Pleasure to be
So
here.
how are you feeling about the market? We've had its recent rally and now today a lot of red. How are you feeling about the market?
So we feel that the market is basically telling us that as long as inflation comes under control, they're willing to ignore all the other problems, right? And we've been talking to clients about this for a while, that it's important not to be too bearish at these levels, because at the end of the day, Nicole, consumer spending is about 70% of our GDP, which is relatively strong, especially in the service area. I've been traveling for a few days for work, for a few weeks for work, and every city I've gone to, the airports are jam-packed, right? And also we feel that, this is election year, and historically, whenever there's been midterm elections in the 1 year following it, the market always goes up.
That's right. Yeah, I was talking with Michael Ranking, who's the market strategist here at the New York Stock Exchange, and he used the word never because it's true. You're right. Historically, the year following the midterm elections goes up.
Yes.
Never has there been a down year. I mean, I can't believe it. When someone uses words like always and never, I start to get nervous. But things do feel better, don't they? Like we've passed the hurdle at this point. What's the strategy at this point, assuming inflation has peaked but still is really hot, right?
Yeah, so we think that, in this market, we've seen a rally in tech recently, but we feel that tech is going to be a bit vulnerable because, if you look at the 1 year T-bill, which is giving about 4.6%, it becomes very difficult to justify investing in a high growth company for some future growth, right? So I think the emphasis of the leadership in the market is currently in tech, but that's going to change over the next 5 years, and it is going to shift to energy, financials, and healthcare. So investors would be prudent to focus on those sectors.
And those seem to be a little more recession-proof, things you need. Tech, interestingly enough, I mean, we need tech. We need semiconductors. We need tech as well. But somehow I think they had lofty valuations and people have been less likely to grab onto growth stocks at this point. So when you look at in energy, I know you have Exxon as a name on your radar. You'd buy it today or soon? How would you play that?
Well, the reason why we like Exxon, and Exxon is a good long-term company, so it depends on your individual investment objectives. But the reason why we like Exxon is we think that the transition away from fossil fuels is going to take time, right?
Right.
And in the meantime, from now up until 2045, we think that the world economy is going to double, more than double. So the demand for oil is going to surge. The supply is relatively limited because of geopolitical constraints and because of OPEC limiting production. So a company like ExxonMobil, for example, their break-even on oil is about $41 a barrel, right? So with oil at $85 a barrel, it's very profitable for them. So this is a stock on our watch list that we like. The stock's gone up, Nicole, about 80% this year. And in spite of that, it is still trading at about 10 times earnings, which is still relatively attractive.
Which is relatively low in comparison to other things, right? When you talk about 10 times earnings, I mean, sometimes you see 16, 17, I mean, that would probably be more average. And then the lofty ones, I mean, they're to the moon. So you picked that one. How about Visa? That was a name you liked. Why Visa?
Yeah, we like the credit card companies because this is going to be the first time in 3 years that the consumers are going to be able to go out and enjoy the holidays without having to be scared about COVID, right? So with that, we see that consumer spending is going to increase. And we feel that Visa as a stock on our watch list benefits from that because they make their fees based on total spending, which goes up, right? And another trend that we are seeing these days is that people are splurging on international travel, right? They want new experiences. So Visa benefits from that as well because they make money on the high margin cross-border transactions.
Yeah, I mean, you have the cross-border transactions, people are traveling, they make money globally, I mean, everywhere as people are traveling around the world. And you're right, there's been pent-up demand, and while people may want to spend, they were saying during the holidays, people may spend less. So instead of going away for 5 nights, they may go away for 3 nights, but they're still going. They're not canceling. Last but not least, you had mentioned pharma, healthcare as a group that you liked. Exxon, for example, we talk about these names. These are all dividend payers, names like Exxon and many of the healthcare names. So tell me a little bit about Pfizer. That's a name you like.
Yeah, Pfizer is a stock on our watch list that we definitely like. What's going on in that space is that life expectancy globally is increasing because people have greater access to healthcare, right? So as people are living longer, we are getting population growth. That's good for drug manufacturers because it means a larger customer base for their products. And Pfizer has been hitting it out of the park with their COVID-19 antiviral, with their COVID-19 vaccine. But it's not a one-trick pony. It has a solid pipeline of over 100 projects in clinical development, pays a solid dividend, so we like that company.
Yeah. Do you have a year-end target on the S&P or where you think it might be in a few years?
We think that the S&P over the next year or so is going to be range-bound, and that is why for the past few years, the strategy that has been working is being passive investment and investing in the growth area. We think over the next few years that strategy is going to fail. Investors are better off trimming as the market goes up and adding positions as the market going down. And focusing on dividend payers, because if it's going to take a few years for the market to go up, you might as well get paid while you're waiting.
Aadil thinks we need a lot of patience. It sounds like. It's good to see you. Thank you so much. Thanks for being here in person. Aadil Zaman, partner, Wall Street Alliance Group. Thank you.
Thank you.